You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. It is noon Central. It is 1 p.m. Eastern. We are ready to rock and roll with your bi-weekly options extravaganza known around the globe as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever scintillating, ever insightful network upon which so many of you are just mainlining these days. Remember, if you do like what you hear, this show, the full network, any other show on the network, whatever floats your boat, do take a second to rate and review. It really does help all the new folks continue to discover the content, and they are clearly legion out there. And of course, if you want even more content in your lives, and hey, who can blame you at the end of the day? There's always more options, education, and learning to be done, questions to be answered. Then theoptionsinsider.com/pro is the place to go to indulge all of those cravings over there. You get pro Q&As, you get options oddities, you get giveaways, you get live access to everything we do. You get bumped to the top of the list for questions, all sorts of fun, and a whole bunch more. theoptionsinsider.com/pro. Or for you cool cats and kittens out there, /secret club. Let's see who's joining us on the old program today. First, let's go out to the quiet hinterlands of Chicago, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show on this, what used to be an Uncle Mike type of day, not so much anymore. So.
Well, we got to talk this market up. Everybody buy some stuff right now. Let's get this thing going. Let's hit 4,600 by the end of the show.
Yes.
We can do it.
Yes. Modest goals here. 4,600 by the end of the show. End of the show today. And unfortunately, the grumpy one who likes to talk down the market, the rockingest of lobsters, a bit under the weather today. So he sends his regards, but he shan't be joining us. According to him, he said he sounds like the grave, quote unquote. So he didn't want to scare you and or the children by joining on the program today. So hopefully he'll be back with us next week. But never fear, listeners. We have joining us today in his regular Thursday slot now, holding down the CBOE hot seat, our old friend, the FLOWMASTER himself, a.k.a. Henry Schwartz, a.k.a. the Vice President, Global Head of Client Engagement, Data, and Access Solutions over there at CBOE. It's just easier to call him the FLOWMASTER. Mr. FLOWMASTER, welcome back to the show, sir.
Thank you, Mark. I'm always happy to join you and talk about this wild and crazy market that we have.
Got more wild and craziness in store for us this week, so let's get to it with the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. And as I said at the top of the show, we were starting off the session in the Uncle Mike realm. Most of the major indices were hanging out in the green, flirting around that 41.5 level in the S&P. And now as we're kicking off the show, we have done our dalliance with the dark side. Most of the major indices have now turned to the red. S&P threatening to hit that 4,100 level, maybe break through it. Bounced off about 41.05 a few minutes ago. So we'll see if we can hold this level or break back below 4,100 today. Most of the major indices are, again, now firmly in the red. S&P off almost 0.25%, a little over, closing in on 0.25%. Dow, similar percentage. NASDAQ, a bit of a laggard, only off about 0.2%. That means most of our vol friends are kind of hanging out where they were, maybe a wee bit firmer. VIX, when we kicked off the show, is actually hanging out right about a 20. That actually puts it up a half a point so far on the day. It's had an interesting little range. Got down as low as about 1907 today. So it threatened to actually hit 1902. So it threatened to break the 19 handle today before turning around here as the market started turning down. VVIX, the vol of vol. Remember I said earlier, listeners, probably can't hang out in that mid to high 70s range for too long. And it is not. It is up 10 points from our last show, back up to a 95. Whatever you might want to say about these markets, maybe you have notions or issues about the directions they're moving in. They should be moving up. They should be moving down, whatever it might be. You can't take issue with the fact that vol is moving, and hence our VVIX getting frothy again, back up to a 95, or maybe you could argue should have been for a while up here. VXX, this formerly broken product, now trying to regain some of its lost luster. 11.75, up about 0.25 point from last show. UVXY still hanging out right around the 5 handle. That pretty much puts it unched on the week. SVIX was at about a 17.5 when we kicked off the show. That's pretty much unched. That's pretty much where it's still hanging out. UVIX at a 19, also unched on the week. And VolQ at 25.30, up about a full point from where it was this time on Monday's show. All right, a lot to unpack. Let's start with our guest. We haven't checked in with him in a week. A lot going on out there. Mr. FLOWMASTER, these markets were starting off green. Now we're turning red. What is lighting up your tape and catching your eye out there today, sir?
Well, you're right. Employment data, employment data was kind of the name of the game today at 8:30 this morning, New York time. And we had some we traded higher, and then we kind of gave it away, and now we're trading lower. It's kind of interesting, right? You know, we kind of, most of the analysts think we're getting towards the end of the rate hike cycle, and now, focus is on kind of some of the more subtle, are we going to have a recession metrics, right? So there's a lot of people trying to make sense of numbers as they come out and second guess everything. I just think that it's also the tail end of the earnings season, right? We still have a few things coming through, but all the kind of the biggies are done, I believe. So it's just kind of, like I said, it's kind of my favorite market when things really get shuffled up, and then you don't really have an overwhelming kind of single, dimensional sentiment. You have a little bit of everything. So, we had the very, very strong rally when Powell was talking the other day. What was that, Tuesday? And so it's just, there's some good realized volatility. There's a lot of good trading opportunities, and that's, what I'm most excited about.
Yeah, we had some crazy whipsaw action on Tuesday. Starting the day up about 0.5%, selling off pretty much immediately a full percent from there. Whipsawing right back up again, then right back down. Yeah, Powell really sending the market for a loop. Tizzy back on Tuesday out there. So intriguing stuff. Yeah, it's hard to tell what mode we're in with the market. For a while there, it seemed like we had shifted back into good news for the economy is good news for the market. Again, we were all whistling past the graveyard. Now it seems like maybe we're dialing it back. We all got some perhaps shocking good news last week with the jobs report. Maybe that was too much of a good thing. So yeah, we're kind of in between phases, it seems like right now. The market doesn't really know. Is good news again? Or is good news really bad news? Because it all ties back into the Fed at the end of the day. Mr. Uncle Mike, sir, you're always in a good news type of mood. What's catching your eye out there in today's market, sir?
Sell everything. We're going to zero. No, just kidding.
What happened to 4,600? That was just like 5 minutes ago.
I already changed. That trade's done. No, just kidding. So in looking at this today, I have a lot of agreement with the FLOWMASTER in that this is an exciting market right now, in that it looked like we were going to come up and take off from the 4,100 level the other day when Powell was speaking. We have not. We're still kind of sitting around the 4,100 level in the S&P 500. So we have that. But I think that we still have not had, if you're looking throughout the year, this year, or so far in the craziness with which we call 2023, we've not had a lot of earth-shattering down days. I believe the 18th of January, we had a down day to where the high and low was a 90-point range. And then in looking at that, other than that, we really have not had a lot of super powerful down days by any means. We've had a couple of up days that have gone fairly strong, but nothing of major significance. Like when I look back on like a November 10th, for example, and I'm just picking out a few random days from a chart that I'm looking at right in here. And we had nearly 100-point up day that day. We haven't had anything like that yet this year either. So what's exciting about this is that this could be kind of a coiled spring, and the market could be getting ready to move a nice direction in one way, shape, or form. Obviously, I'm of the school of hope that, and I understand you should never invest in hopium. Hope rhymes with dope, all those things. But of course, me being the long-term bull with which I am, hopeful that we have an increase in our markets. But if not, risk is managed and we're ready for it should it not happen. We're still kind of having a hard time breaking through on the 10-year note at this stage. And so we had a pretty nice rally on it to start the year, but looks like we've kind of petered off a little bit on it. And nothing wrong with that. It's a great time to sell some premium if that's what you're into. So I really do continue to like selling premium on bonds at this point in time. Silver's pulled back a little bit, so we are dealing with a pullback along those lines that we're not getting the precious metals into the act of making a bull market out of this. And then the other thing, we still have natural gas just sitting down there in the low levels. Now, granted, it's up 4.88% on the day, 251, but that's really that's not major news for natural gas. So we have that happening. And then a lot of stock news recently, in that today there's an interview with Bob Iger, the new CEO, or I should say the new brought back from the old CEO of Disney, talking about the war on the board is over. Disney rallied on that, it looks like. It actually touched 118 today. And Disney has just been going sky high since the beginning of the year. And it pulled back quite a bit. I think it was unjustified how far it pulled back. And it's really been on the move lately. And so that's another one that I've been watching. And then the other one that's pulled back a little bit recently, of course, is Amazon. Amazon has had a nice run so far this year from where it was, but Amazon's also pulling back again. So we have a lot of things that are happening to where I'm thinking I'm typically more of an index kind of guy. But as I'm looking at a lot of these stocks that have pulled back and potential dip buying opportunities, I think this is becoming more of a stock picker's market. Once again, I'm more of an index guy, but there are times to where picking stocks can be beneficial. And there's some nice names that have dipped pretty nicely. Google's another one. Google, if you have patience with Google and are willing to ride out the ups and downs somewhat, maybe sell some puts and take a look at that if you're willing to take on that risk. So there's a lot of stocks like that right now, and it's an exciting market.
Always an exciting market out there, but you're right. Intriguing stuff. Looking at Amazon right now, they're back below 100 ever so slightly. They're back pretty much about 10 handles away from where they were when we did that poll, that infamous Amazon versus Facebook poll we did just a few months ago now. Of course, Facebook/Meta now over 100 handles north of that level. So they've just put that in their rearview mirror. But Amazon's starting to threaten that again, which is interesting again, because the overwhelming majority of our respondents said they wanted to pick Amazon over Facebook. And yet, in the near term, at least, not looking so good. Let's see what is looking good out there from a markets perspective. Let's fire up the old trade alert machine. Got the FlowMaster joining us. Let's see how much trade alert fun we could pack into one show here. First, let's go out to the land of the VIX. And VIX, once again, it seems like post-Powell, we've hit this new regime. Will this last? Who knows? We've done this before, listeners, where VIX kind of perks up post-Fed, then it kind of falls into a bit of a malaise. We'll see if that happens again. But right now, VIX looking pretty frothy. 453,000 contracts on the tape as of a few minutes ago. Even more impressive, that ADV, which was just circling 500,000 not too long ago, is already back up to 634,000. So that ADV has surged over 100,000 contracts to the good. So that's just reflective of how much paper is going up out there in VIX land again. SPY, not to be forgotten, 5.4 million contracts right now. The ADV a little bit north of 9, about 9.1 million. The S also looking pretty robust, 1.4 million contracts on the tape. The ADV 2.7. Let's play my favorite game, listeners. Let's fire it up really quickly and see exactly how many of the top 20 in SPX today are not expiring today. And the answer is, of course, 0. It's kind of a boring game now because that's pretty much always the answer. So let's expand it to a top 40, shall we? And then the answer is a whopping 3. 3 of the top 40 contracts in SPX today are expiring a day other than today, and all of those are expiring tomorrow. So you're not talking long-term paper. You're talking 24 hours at the longest here. So, yeah, this is just a very different beast than it was not too long ago, listeners. Small caps, IWM, 584,000 contracts on the tape there. The ADV, 865, so looks like it might be on pace to hit it there as well. And the Qs rocketing north, 1.6 million contracts right now. The ADV just a tick below 3 million right now, listeners. Let's get out to the single names. Let's see if it's the land that time forgot or if folks are actually playing ball in the single names. And you know what? It's still earnings season, so single names are looking pretty robust right now. As Uncle Mike said, it's a stock pickers market, and these are the stocks people are picking apparently today, at least from an options volume perspective. Number 10 cost you 393,000 contracts to break into the top 10 today, listeners. That is nothing to sneeze at. That is pretty impressive. That gets us to our old friend Softy. Softy started the day within spitting distance of 274, trading 267 exactly right now. So they have come off it here a little bit. More talk about antitrust with them lurking around their deal with Activision. Of course, all this AI madness with the chat bot now, all that fun weighing on it. Either way, though, good for nearly 400,000 contracts. And right behind it, saying, hold my beer, kid, is number 9, Bed Bath & Beyond. Are we going back to the Beyond? Are we going to 0? Who knows where we're going with this name? It was just trading almost $7 a few days ago, listeners. Monday, it was trading 6 3/4. My goodness. Back to $2.50 today. How much living they have done in this stock just over the last few days. Good for 394,000 contracts, 1,000 contracts more than good old Microsoft out there. Then the artist formerly known as Facebook coming in at number 8. This is Meta, 405,000. So again, we're at number 8. We're already pretty much north of 400,000. We were pretty much at 400,000 to start our list. So that's a pretty robust day, listeners. It's been a while since we've seen things this dense from a volume perspective. Meta hanging out 180, pretty much exactly, off about $3.50. Remember, I just said Amazon breaking 100 in the wrong direction. Meta still hanging out at 180. So you're talking not quite 100 handles now. They've given some of it up. About 90 handles north of where they were when we did that poll. It has been just a ridiculous turnaround out there for Meta. Good for 400 to 5,000 contracts. Number 7, Uncle Mike's new favorite. I didn't know he was a Diz fanboy, but intriguing stuff. We were, of course, talking about it on the network when they had the whole CEO shakeup. A lot of people not exactly fans of Bob Chapek out there. So his replacement, bringing back the old, out with the new, in with the old in this case. Folks were excited about that. Looks like folks were decently excited about the numbers, even though some of that has cooled a little bit now as well. Disney, number 7, 479,000 contracts, trading about 114.5. As Uncle Mike said, it touched 118 earlier this morning. Started the day at 113, so it's still up on the day, but also are pretty far away from their 52-week low, which they hit not too long ago, right around the time that Iger took over, of about $84. That's a nice little pop out there for Disney. Can they maintain it? Obviously, still some headwinds. Everyone's focused on the streaming, but the parks are having issues, staffing issues, just all sorts of issues with the parks. Obviously, the movies kind of underperforming. ESPN has kind of been an albatross around their neck for a long time. So there are a lot of different moving parts of the Disney equation that are somewhat struggling right now, but it looks like the stock robust. People still basking in that Bob 2.0/1.0 glow over there. Number 6, as I said, number 6, we haven't seen them down this low in a while. This is the Amazonians here, 488,000 contracts. I just said they were pretty much exactly a buck below 100 now, $99 off $1 today. Good for 488,000 contracts out there. Wow, number 5. I can't remember the last time I've seen Apple at number 5, listeners. I can't remember when it was below 3. So, wow, 5. It's also a pretty light day for Apple. Only 600,000 contracts for Apple. Apple definitely seems to be ceding its crown to the newcomers out there. Tesla certainly has a firm grasp on it, but even some of these others. Amazon usually above it. Today, not so much. Apple actually up on the day, up about 2/3 of a point, trading right around 152.5. Obviously, still well north of its 52-week low of 124 and change. They get the bait and switch winner award for last week. I mean, obviously, Facebook did a pretty good job with the $40 billion worth of stock to mask their losses in other areas, but Apple just straight up had a terrible quarter, and they still managed to rally somehow. So that reality distortion field still in full effect over there at Apple. So I tip my cap to them. Number 4, back to the chip zone. No AMD today. NVIDIA, the only representative of the chip zone lurking out there today. 665,000 contracts on the tape for them. NVIDIA up almost $5, 4.75. So getting a nice lift out there today. Wow, it's up 90% since October of last year. So NVIDIA getting a nice rally. Then Uncle Mike's favorites, the GOOG twins, GOOG and GOOGL, number 3 and number 4. 757,000 contracts for GOOG, good old GOOG, and then ye old GOOGL hanging out at 1.2 million roughly. So they, of course, as Uncle Mike said, taking a bit of a hit today off almost 5%, trading right around 94.75. On the year, they are off the low. The low they hit was back in November 3rd. They hit about 83 1/3. So they're about 11.5 handles north of where they were back in November, but also obviously pretty far off their 52-week high of 143, almost 144. Looks like they hit that back in the March timeframe of last year. So most of last year for Alphabet was pretty much looking down, listeners. Again, no surprise, given everything else we saw out there in the market. And then number 1 also should come at no surprise, listeners. It's our old friend Tesla, up another whopping 11 handles. Man, 5.5%. State of the Union, obviously, pretty pro-EV. A lot of people backing that into some love for Tesla here, up 5.5% today. Again, also pretty far north of their 52-week low of a little bit shy of 102. They set not too long ago as well. Nearly 3 million contracts on the day for Tesla, listeners, 2.87 million. That is nothing to sneeze at out there as well. That is quite a bit of paper out there. As the FLOWMASTER mentioned, we are still pretty much in the midst of earnings season. It never ends, listeners. Even when it's the dregs, there's names popping off. There's always something to talk about when it comes. And then right when you get down to the ultimate dregs, it all starts over again. So earnings, the gift that keeps on giving from an overall options volume perspective. Big names popping off this week. We kind of said it on the show earlier this week. We had Tyson, Pinterest, Activision, Blizzard, Take-Two, and a bunch of others on Monday. Tuesday, BP, obviously with all the energy companies posting record numbers. Some folks may be taking some umbrage with that, saying, hey, you're war profiteering, all these other things. They're also shifting some of their investment away from some of their renewables, which some folks aren't happy about, but still record profits across the energy space. Hertz, DuPont, and Chipotle on Tuesday. Wednesday, we had Under Armour, CVS, Uber, Wendy's, and the aforementioned Diz. We all know how that went. Robinhood also popping off yesterday as well. Let's see where Hood's hanging out here really quickly. Right about the 10 handle, 1034 right now, kind of a little bit off slightly on the day. They did hit 11 earlier this morning, so they are off the highs from the day. So I guess the market not overly in love with the numbers they were hearing out there. And then we have today PepsiCo, the Duck, a.k.a. Duke Energy, Hilton Hotels, PayPal, Lyft, and Toyota. And tomorrow, we've got Honda. If you want updated earnings, move reports, and move results reports coming in hot off the presses, let's get out to PepsiCo really quickly. They popped off before the bell today. 171 was where they were trading going into their announcement. They were pricing in 1.8%. They're pricing in 2.3%. They delivered 1.8%. So not a heck of a lot of beverage vol out there for PepsiCo. Let's go to the Duck, see if that's any different. They popped off before the bell as well. 99.20 is where they were trading. They priced in 2.7%. They delivered 1.7%. So that's kind of surprising. An energy name underperforming from a vol perspective. Speaking of underperformance, let's go to Disney. They were yesterday after the bell. They went into their announcement 111 3/4. They were pricing in 5.8%, listeners. They delivered 1.9%. Of course, this is all a frame of reference question, so let's pull it up now and see. Let's see. They're actually about $1 north of, actually about 70 cents north of where they were when we ran this report this morning. So they're about 2.5%, still underperforming what they priced in, I should say. So intriguing stuff. Let's go to Hood really quickly as well. They were yesterday after the bell. $10.50 is where they were going into their announcement. And they came out of it when we ran this report this morning, $10.50. So they were almost literally unched. And they were pricing in 10.4%. So vol sellers out there, you're looking pretty good. They get the winner chicken dinner today for the most vol underperformance that we've seen, at least from today's numbers. Coming up later today, we've got LYFT after the bell. 16 3/4 is where they were trading. They're pricing in $2.50. In the past, they moved $2. So pricing in a little bit of extra juice. PayPal, 79, almost $80 is where they were trading. They're pricing in $6.50. In the past, they moved 6 1/3. So not a heck of a lot of extra juice there. Speaking of extra juice, let's see if the season is still looking frothy and effervescent. And the answer is yes, but not quite as robust. I said it had to come off. It was north of 150% on our last report, listeners. That is not sustainable. And right now it's back down to a still impressive 125%. Week 1, we're hanging out at 114%. Week 2, 121%. Week 3, 145%. Week 4, 109%. So every week so far, outperforming, which is kind of interesting. Remember, listeners, 100% is if everything moved exactly as much as this straddle was predicting. Obviously, we're moving more than that, so we're in the green for the season. It also looks pretty good when you look at our average, pretty much since the pandemic, is about a 92%. So 125, can we maintain that? Probably not, but it's still an impressive number nonetheless. If you want to see, also, we did exit a bunch of trades today in LNC and SEEE, SSTK. We closed out straddles in those, and we closed out calendars in APPS and AZN. And then we're adding a whole bunch of more straddles, 1, 2, 3 straddles, and 2 more calendars in LYFT as well. So if you want to check out all those trades, what we closed, what we opened, the season report, everything else, you know where to go, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey as we continue our journey right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down all the weird, the wild, the completely unruly activity that we're seeing for you out there, where we fire up the Eye of Sauron. Today, the Eye of Sauron, powered by our friend, the FLOWMASTer out there. Mr. FLOWMASTer, if folks are so inclined, they want to head on over to Trade Alert and get access to the Odd Block scan for themselves. How do they go about it, sir?
You can just go to tradealert.com. That'll forward you to our CBOE page. And you can actually, for Trade Alert, you can request a free trial if you are not a professional. And I invite anybody that's listening to request a free trial. You just actually walk through the sign up, don't put a credit card in, and then send an email to support@tradealert.com. That's support@trade-alert.com. And we'll get it, and then we'll see that you had an account that was almost finished, and we will set you up. And then, basically, knowing that you're an option block listener, we will set people up to have the exact same Eye of Sauron button. I guess we should retitle it. It was like a little picture of an eyeball. Happy to kind of show people the cool stuff.
Don't tell this Tolkien estate. It's our secret. All right, let's get into this fun. Actually, speaking of firing up the scans, we're going to go back a little bit first here, Mr. FLOWMASTer. We're going to go back to a trade we talked about on Monday's show. It was in a name we don't talk about all too often, but coming up on our radar here in earnings season. This is Pinterest, ticker symbol PINS, PINS. Trading right now pretty much exactly $25, off about 85 cents on the day. On the year, pretty close to where it started the year as well. It was $26.80 a year ago. So net on the year, they're off not even $2. They sold off initially down to their low for the year of about 16 and change. Looks like it was back in the May timeframe, May through July. Looks like they tested that low a few times. And then after July, they started turning north. Not straight north. They rallied and sold off more than a few times, but they ended up getting all the way back up to about 29.17. That was on February 2nd, just a week ago. And now since then, they have given up about $4 of that, back down to about the 25 handle, but still looking pretty good. On our Monday show, Mr. Flowmaster, I was debating with the Greasy Meatball there. We talked about these Feb 29 calls expiring today, so the 10th in Pinterest. We saw a block of 5,035 going up for pretty much splits, right around $1.20, going through the offer to get them all done. Obviously, the vol is a meaningless number in a weekly, but it's 152 for those who care about such things. The stock was $27.39, and this was pretty much going up right before earnings. They had earnings that same day after the bell. And so we figured we would know by today if these calls were working out. Now, during the show, we kind of debated whether we saw another 4,000 lot go up. Not that long after. Looks like it was about not even 10 minutes later for $1.33. So we were kind of debating whether they maybe scratch these right away. The second block was done tied. So if there was a stock leg, that obviously complicates things a little bit. But straight up on the options, they would have made, looks like about somewhere in the neighborhood of 14 cents, close to it, if they did take them off. Now, what also complicates things is there was still a ton of paper on this strike. There's still a ton open going into today, 17,000 contracts. So if they left these on, the stock is $25 now, listeners. So obviously it is well below the 29 strike that they were swinging for back on Monday. So if they left these all open and they're sitting on them right now, that's not great. That's going to be about $600,000 coming out of their pocket if they did them straight up without any stock. But Mr. Flowmaster, I'm curious for you, where do you fall in this debate? You think they left them open, or do you think that 4,000 lot was actually them trying to get out while the getting was good, sir, back on Monday?
I think they might have gotten out of some. I'm looking at the life to date on it, and I do see that big old slug on Monday. I don't know if they got it. I think they might have trimmed it a little bit, but I think they kept on most of it, actually.
Yeah, we like to be charitable with these and assume the most optimistic scenario, but the cynic in me says, yeah, they didn't. They did this trade for a reason. They weren't going to get out of it 10 minutes later, but earnings hadn't even happened yet. So it wasn't like they got that big of a move in the stock. So I probably lean towards the fact that they rode these bad boys, and they're probably now out somewhere in the neighborhood of $600,000, somewhere between 0 and $600,000, listeners, depending on how many of these they may have actually taken off. Either way, not a winner. You swing for the fences in a weekly, listeners. You pay out almost 200 vol. You got to have a lot of move in your favor very quickly. And alas, they did not. Speaking of the last show, Mr. Flowmaster, also going back to it again. To this one, actually, we got so busy on Monday's show. I don't think we ever had a chance to actually talk about this on the air. But this was another one that our Eye of Sauron found for us on Monday. This is a newcomer. This is AirSculpt Technologies, Inc. Ticker symbol AIRS, AIRS, trading right now $7.32. A year ago was pretty much double that. It was $14.60, which was actually exactly double pretty much. And then since then, it kind of had a rough year. It sold off down to about $6 on June 17th. So that was already pretty rough. Then they tried to rally it. They said, no, we're actually looking better. And they got it all the way back up to $11.20 again in August. And then from there, that was kind of all she wrote. They sold it off again to the low for the year in November of $2.70. And then after that, actually, it looks like the last a couple of months, it's actually had a little bit of a decent run again. So maybe the death knell was premature here, because they took it from $2.70 all the way back up to almost $8 again. It was $7.80 just a couple of sessions ago, and now it's trading $7.30. So just in the last month, this thing's up 62%, nearly 3 handles. So a nice little pop here for AirSculpt Technologies here. Now let's see what our Eye of Sauron found on Monday's show. Then we'll maybe see how it paid off. On Monday's show, we talked about the Feb 10s going up. A whole bunch of blocks of these, 2,173 of them going up for 15 cents. That's the first one that caught our eye. Again, the 10s, the stock was $7.50. They were paying triple-digit vol, so you know you need something to happen pretty quickly. Weird thing too, they did these and earnings they're not even this week. They're on March 10th. So it was a weird trade. So far, again, they did a total of 6,000 of these bad boys. And looks like these are still open. Obviously, they have until, these are not February 10th. These are February 10 calls. So these are still open, but at least so far, not looking good. Like I said, the stock is 732 right now. So they have time, but these calls, they don't have that much time. They got about a week and a day for these bad boys to kick it into gear. So not looking good. Of course, if this stock doesn't turn around for them, they're out close to 100 grand, about 90 grand on these bad boys as well. Mr. FLOWMASTER, looks like we're going to be pretty much 0 for 2 here so far. Is that your takeaway as well on these calls here in your new favorite, AirSculpt Technologies, Inc.?
Yeah, I'm looking at that trade. It looks terrible. I think it looks like a couple of them traded for a penny today, so that's not going to feel good if you paid your dime to get in. I mean, the only other thing I'm thinking, I was just talking to a trader on a desk about short squeeze, people that are kind of sniffing around for those potential setups. I mean, Airs is kind of hard to borrow. It looks like it costs around 8% to short it. And it's up from around 2% a couple weeks ago. That you can see that in Trade Alert if you just type /borrow Airs. So we do see people kind of looking for names that might not trade a ton, that have an expensive, a relatively expensive borrow where they could kind of shoot up. That's kind of what we saw in Bed Bath & Beyond, right? So, but this one looks like a really badly executed one. I mean, $10, you're talking about, 30% away. I just think this is, somebody was trying something, but they didn't get anything out of it.
Yeah, it seems like this one kind of going the way of the dodo as well. Let's see some more paper here from today that our Eye of Sauron found for us. And maybe this will change the game here. Well, let's see. This company is trying to change the game. We've talked about them before. It's been a while since we checked in on them. This is Pure Cycle Technologies, Inc., ticker symbol PCT. You remember these listeners, they're trying to pretty much recycle all of our plastic waste. So it's a laudable goal. We all want them to succeed. We all are drowning in way too much plastic, obviously. So if they can be successful, that's a great thing. The stock right now, $7.94. On the year, it's been quite the journey. A year ago, it was $5.92. Then they shot up right away. March 17th, they hit $10 pretty much even. Then they drove it back down again. July 11th, it hit $6.66. Then it rallied again. August 12th, it hit pretty much $10.95. That was their high for the year. Then they sold it off again in November. It hit pretty much as low as $5.25. And that was their low for the year. They hung out there till pretty much the end of the year, the beginning of this year. They kicked off this year at, looks like, $6.30. So not that far above their 52-week low, and also not that far away from where they started the year a year ago, about 40 cents different. Then they rallied it in January, got up all the way up to $9.32 on January 23rd. And they've been coming for it again ever since. So it's a very volatile plastics company here. And let's see, what did our Eye of Sauron find for us out here today? A huge tsunami of paper, kind of a call-palooza out here. It was the May 11s where the action seemed centered. It's intriguing. The numbers we're looking at, too, I do have a question for you, Mr. FLOWMASTER, on this one, because we saw a big print going up over there on the alerts for nearly 14,000 of the May 11s. Looks like they did these for 107, so kind of splitting the uprights. The stock was a little bit higher. It was 801 when these went up. And then we saw another print of 8,269, also for $1.05. And then 5,512 for $1.10. So quite a few going up there. That looks like that's what's that, 20-odd, 26, 27,000. All those added up together completely. Now, when I ran it again recently, just before the show here, Mr. FLOWMASTER, in the old alerts, it shows me a total volume of 16,800 on the May 11s going up today. So I'm curious. Are you seeing that as well? And what am I missing here, sir?
Pure Cycle. Yeah, that one looks like that one looks kind of like what it looks like. Vol's up 13 points at the strike. Vol's up everywhere in that name. Let me just see if they traded some of it on CBOE exchanges. Yeah, I can see 621 of them printed on our exchanges. Those are all customers buying to open. So I will go ahead and posit that means that the whole the bulk of the volume is customers buying open. That biggest chunk was a Philly chunk, but that's got a little more meat in it, right? May's a ways off. Be a solid move from $8. That might be, and I mean, the coolest thing about when you kind of see these, kind of aggressive call buyers that kind of tweak the pricing a little bit is if you don't believe it, then it creates a wonderful price for an overwrite, That's what I was actually going to bring up DraftKings because I saw some big 9-strike call buyers in there, and this is right in front of the Super Bowl, so they're gonna have nice commercials on Sunday, and so when we see that kind of flow, the 19 strike, it's a $16 stock. When they bought them, the stock was around 17 and a quarter because it was this morning before we kind of reversed here. So some of the professionals I was talking to were kind of looking at that as people making a somewhat uninformed trade ahead of a catalyst that everybody knows is out there already. So, one of those trades that kind of intuitively makes some sense, but then you realize you're not the first person to think about it.
Wait, there's a correlation between DraftKings and the Super Bowl? Wait a minute, I need to go run my charts, Mr. Flowmaster. But you're right, 38,000 of these 19s went up to today, so that's not nothing. Somebody really wanted these things, including looks like big blocks of about 2,000. Let's see, a bunch of 1,800.
But like in the 5 to 10 cent range, so they're cheap.
They are very cheap, and they are. It's like a lot of these are expiring tomorrow, listeners. So they're not even going through the Super Bowl.
Yeah, true.
They're just going pre-Super Bowl euphoria, I suppose. You like those, listeners? You like the Feb 19s expiring tomorrow in DraftKings? If so, you're not alone. Nearly 40,000 of them have traded out there today. Check them out. Hit us up. Let us know. Speaking of hitting us up, let's see what you guys have on your brain. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you guys and gals take the reins. Remember, if you haven't done so already, vote in our question of the week. It expires tomorrow. So if you're listening after the fact on the podcast, you'll have a chance to play along as well. Ad Options is the place to go to make your voice heard. If it's not pinned there, it'll be floating around somewhere near the top. We try to retweet it throughout the week so you folks can find it pretty easily. The question of the week this week, inspired by our crypto rundown program, we said if you had to buy, I'll cover your ears, Uncle Mike, you won't like this one. If you had to buy a 10% out of the money call expiring end of the year on one of the following crypto assets, which one would you pick? Bitcoin, ETH, Solana, or you're done with crypto? We also offered some write-ins. I'll reveal the results for that maybe tomorrow on Bob, maybe a little bit later today on Twifo. We'll see, but get out there, Add Options, make your voice heard. I won't reveal the results now because it would be too deeply insulting to Uncle Mike, a.k.a. the guy who owns BitcoinReallySucks.com. Instead of that, Mr. Uncle Mike, I will make it up to you. Interesting question, submission here from Tom. Tom sent this in. This is up your neck of the woods here, talking about advisors and options, Uncle Mike, but perhaps not in the best of lights. Tom said, did you see that this advisor from your neck of the woods stole money from dementia patients for, quote, risky options trading? And he sent us a link to this story from ABC Chicago here, listeners, so the local news. And they had a headline here, Chicago investment advisor charged with stealing $683,000 from clients, including 2 men with dementia. They go on to say this guy, I won't say his name here, is accused of falsely telling clients he would invest their money in publicly traded companies. He then set up a shell company that he used for personal use, including, they say, rent and, this is my favorite part, unauthorized trading in, quote, high-risk options contracts. So I don't know what they term to be high risk. Maybe he's the one buying all these crazy upside calls we're talking about here. This all occurred back in 2020 and 21, so the go-go kind of meme stock post-pandemic kind of craze time frame. The SEC also has a charges against this guy. They also said he lost clients' money through, quote, risky options trading. So, Uncle Mike, apparently we're back to those days again. This guy obviously was fraudulent. He sounds like if he did this, he deserves what he's got coming to him. But it always is interesting to see the options lumped in as the quote risky, high risk options trading, sir? What say you?
Well, I mean, it's sad because it's sad on two fronts because number one, I mean, that's pretty low, stealing from dementia patients. And throughout my career, I've actually at one point have had two clients that have had a majority of their money stolen, or a good chunk of their money stolen. I even had one client at one point. He's not a client anymore, but he was actually a former Bernie Madoff client at one stage. But he only lost a small amount of his net worth, but to Bernie's Ponzi scheme. But it's really sad that that's out there. And this is a world with which integrity is what you need to. It's more important than anything. If you don't have honesty and integrity, you can't survive in this business for the long haul. And it's sad that that exists. And, the other part is that options being linked to theft, like someone's going to steal money to try and just trade some risky options just because they're options. And I mean, that's sad. Our product really doesn't get a good rep sometimes. In recent years, it seems to have gotten much better. I know it's gotten a lot better than from when I first got into the business. But for the most part, it's sad when something like that gets linked to it. I mean, this is something to where if you protect yourself properly with put options, hedged equity can be an amazing asset class, in my opinion. If you want to collect income on covered calls, that can be also an amazing asset class that if you don't use options, you're not going to be a part of. And so from there, it's sad that that's how it's linked. And then the other thing is that when as popular as indexed annuities are and things like that, what do you think's on the inside of them, folks? It's options. And so that's my take on it.
Yeah, that's what I was wondering too. I mean, I'm not coming to this guy's defense. I'm sure he deserves everything. He stole these people money. So, but what was he doing? If he was buying crappy near dated calls, then yeah, sure, that is swinging for the fences. But if he was hedging equity, like you said, that is hardly high risk. So yeah, I would love to know more about what this person was up to here. Fascinating stuff, listeners. But we got to keep on rolling. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Really quickly, I'll be nice. I'll give you the results as they stand right now from our question of the week before we go around the horn to everybody. And right now, like I said, if you had to buy a 10% out of the money call expiring at the end of the year on one of these following crypto assets, would you choose Bitcoin, ETH, Solana, or you're done with crypto? We gave you an out. And Uncle Mike will be happy. Right now, exactly a third, 33.3% are saying they're done with crypto. It was Bitcoin in the lead. Now it is down to 30% for number 2. Number 3, we have ETH at 20%. Number 4, Solana bringing up the rear, 16.7%. You have 1 day left to vote, listeners. Get out there and make your voice heard. All right, Mr. Flowmaster, sir, a lot to unpack. We already had Powell this week, but there's still more earnings, all sorts of other data on our fingertips. What are you keeping an eye on for the rest of this week until you join us again on the show next week, Mr. Flowmaster?
Yes, it's nice to talk to you every week. I mean, you're right. The earnings that are coming up, they're kind of some of the exciting ones, right? We got like Coinbase, Roku, and Carvana. Those are all in the next week or two. And those have implied moves, in the 20% range. So that makes for some fun. I mean, one thing that I've been kind of paying a lot of attention to and was talking to some people about yesterday is the put call skew in single names, meaning how expensive the puts are, out of money puts versus out of money calls, right? And we're seeing a weirdly cheap environment. Even with today's sell-off, I was just looking at Amazon, and you can basically put on a 10-point collar around in April around spot for 0. And so they're not inverted, but they're kind of down to, a point and a half or 2 points of vol skew between the 25 delta call and put. And, for me, that's when there's a couple ways to read it. One is this is an awfully optimistic view of market performance. So you could kind of take that with a contrarian bent and use it as a signal to kind of, minimize your delta or even lean short. But if you're kind of a longer term investor, man, if you can buy something like Amazon and put on a collar for nothing, you don't have to worry about it going down more than $10, at least through the expiration. And yes, you've given up some upside, but you still keep 10 points of upside. So I'm actually going to I wrote myself a note to try to pull from our database all of the collars in the April expiration in names that are liquid that are pricing out at zero, and kind of see what that list looks like, because it is, if you're even if you're new into options, one of the first concepts, kind of like Mike mentioned, is, you buy a stock and you sell a call, right? It gives you some yield, you keep some upside. You're in a way you're better off than if you bought the stock, except for if the stock, really shoots higher, and in which case you're not really participating. Think about it that way, plus adding on a hedge, basically spending the money you collect in selling the call to buy some downside insurance. And then all of a sudden, if you think about it in like a hockey stick chart, you don't have the downside exposure beyond that put strike, and you don't have the upside participation, but in the middle, you still do. In the middle, basically, it's still like you own the stock. So that's something that I'm gonna try to see if I can get a list out of liquid names with zero cost collars that are symmetrical. I will send you the list and put it on LinkedIn and Facebook and everywhere else.
I like it. You might need a new button to add to the trade alert, the collar button, the collar scan button.
There you go.
Zero cost collar. I like it. That sounds kind of cool. Yeah, and that's something our audience would obviously get a lot of interest out of. They love things for nothing. Definitely out there. So you're right, but these are intriguing environments out here. Mr. Uncle Mike, what are your thoughts about all these zero cost collars floating around out there? And what else are you keeping an eye on until our next show for you on Monday?
The excitement of Roe being back that we didn't have a year ago. So a lot of times when you have a little bit more of an interest rate, you can put on some of those zero cost collars. And I know that I'm delving very much in that world for some of my clients, and how I'm looking to beat the indexed annuities, so to speak, and do some things with collars that I think can be done more efficiently outside of indexed annuities. Nothing against indexed annuities, but just when we get markets like this, it can get kind of exciting and competitive. In terms of what I'm looking at, we do have more earnings coming out, but 4,100 is the number with which I'm looking at right now. We've held it throughout the show. We're at 4,104 at this stage, but curious to see if we can continue to hold 4,100 in the SPX.
All right, listeners, that music means we are done, at least for this show. Don't worry if you want more living in your lives. Hang out. We'll be back in a little bit over there with everyone's favorite futures options show. Yes, it will be Twifo. My guest will be John Brady from RJO. Man likes to talk about rates, so we'll have a lot to talk about, I'm sure, given all the action that's happened over the last week. Before we get there, let's go back around the horn. Let's start with the FlowMaster, sir. If folks are intrigued, they want to check out the zero-cost collars, they want to do the odd block scans, they want to see anything else you guys are cooking up over there at CBOE, where should they go? What should they do?
I would suggest go to CBOE.com/DNA, which is data and access. That's my department. CBOE.com/DNA, and you'll actually have you'll see all of the services we offer. And like I said, don't be afraid to ask for a trial. If you're a non-professional, we're happy to help you out, except for the Trailer API, which I talked about last week. CBOE.com/DNA.
There you go. Easy to find. CBOE.com. You probably know it. You love it. You've been there before. Just go to /DNA this time to find all the cool stuff Henry's talking about here on the show. You too can fire up your own Eye of Sauron. Just don't tell the Tolkiens thing. And Mr. Uncle Mike, sir, where should folks go if they want to see your ever-expanding content offering?
Follow me on Twitter, at Mike TOSAW, TOSAW. And if you're looking for a financial advisor who does believe in hedged equity is an asset class and covered calls for income is an asset class, look me up, stcharleswealth.com.
All right, check him out, stcharleswealth.com. And, of course, he couldn't make it. He's under the weather. Check out the boys over there at the pit. Optionpit.com is the place to go to learn about all the stuff they got cooking. We got to get on out of here. pro folks hang out in the live chat. We'll pump some fun stuff in there. Back in a little bit with John Brady to talk about all things futures options on TWIFO. Then back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. A lot of vol to unpack this week. Go figure. Should be a fun show. Followed after that, all you pro folks with options oddities. Where do you go to get access to all that pro fun? Of course, theoptionsinsider.com/pro. Then we're back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.